Hello, good morning. I'm Avnish Jain. Welcome to this monthly data outlook from Canara Robeco. Geopolitical situation continues to worsen. In January, we saw US take Venezuelan president out of Venezuela to stand trial in US for various charges. And then US took control of the Venezuelan government indirectly. Now US and Israel have attacked Iran, supposedly to prevent them from developing nuclear weapons. Now they are targeting the missile silos as well. The attack started on February 28th and continues. In response, Iran has remained defiant. They not only attacked US bases in the Gulf countries, but also targeted few military installations and oil and gas installations in Saudi Arabia, Oman, Qatar, even in Dubai and Abu Dhabi. This situation is now getting out of control. The oil prices have seen a big shock, with the Brent crude climbing up to $85 a barrel from about $66, $67 a barrel last week. This has happened because Iran controls the Strait of Hormuz, from where almost 20% of the world oil flows, specifically from Saudi Arabia, UAE, and other Gulf countries. Also, large proportion of LPG, gas, and other constituents also come from that strait. This will likely impact the oil prices in coming days as oil supply takes a shock. India also imports a large amount of oil from the Gulf countries and will look to other sources to get their oil requirements. Considering that the conflict continues even after 4 days, 5 days, in the past, most of these conflicts were temporary and were over in 3-4 days. Now this conflict is now over almost a week old. US President has vowed that he will continue the attacks for next couple of weeks to ensure that objectives are reached. Whatever the objectives are, they're not very clear. A change in regime is obviously the final objective. The impact on markets has been on worldwide. We have seen equity markets fall as well as rates rise. In US, because of haven flows, the US 10-year has not seen much impact. However, in countries like UK and Europe, we have seen yields harden in anticipation of an oil price shock. And in India also, while the impact has been limited, yields have gone up by about 10 basis points in the last couple of days. Going forward, we expect that if oil prices remain high for more time to come, there could be impact on inflation and inflationary expectations in times to come. That could upset RBI's calculation, wherein they have been on hold for some time and are expected to remain on hold. But if situation continues like that, where oil prices remain between $80 to $90 a barrel, it could lead into higher inflation starting from primary articles and then seep into secondary articles. However, there is some good news. Indian inflation remains benign, and it has been benign for last couple of years. We saw a low of 1.5% in inflation last year, and now the latest number has been 2.75%. Inflation is expected to go up to 4% in near term and stay at that level thereafter. However, if the conflict continues to drag for some time, inflation and food inflation could go higher. However, core inflation has remained low in the past, probably driven by disinflation in commodities and other products from China. China has slowed down in last couple of years and remains in a situation where there is oversupply, and that they have been exporting disinflation across the world. Overall, Indian economy continues to remain strong, where growth is about 7 to 8% and inflation is expected to remain around 4%. Unless the war drags for very long, we don't anticipate a major impact on inflation and RBI. RBI will take necessary measures to prevent volatility in both currency market and rate market. Currency has seen up move today, where it crossed the previous high of 92 rupees to the dollar. There could be continued pressure on the currency because of this crisis. On the liquidity front, liquidity remains good, and we anticipate that RBI will take measures whenever necessary to maintain liquidity in a surplus. Considering that the advanced tax outflows will start in next 1 week or so, and also generally the March end has been tight for liquidity, and RBI will take steps to ensure that liquidity remains surplus, especially in a situation where global situation remains volatile and impacts our external sector. On the rate front, we have seen upward movement in rates, though it's marginal as compared to some other countries. The last government of security auction is scheduled for this week. After this, rest of the March, there are no further auctions from the government of India. We would see some supply from the state governments coming weeks. However, there has been a good demand for state government papers, and yields actually have fallen a bit in the last couple of weeks. We expect March to sail through on supply-demand balance. However, April we will see start of new borrowing calendar of the government of India, which may impact rates in that month onwards. Considering the current volatile geopolitical situation, investors may choose to invest in shorter-term funds like savings funds and short-duration funds. As always, investors should look at their risk-return profile and their investment horizon to invest in debt products. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.